Exxon Mobil Corporation is an American multinational oil and gas corporation and the largest direct descendant of John D. Rockefeller's Standard Oil. Now I'm going to tell you the history of Exxon Mobil, from our humble beginnings to a global giant. Vacuum oil company born in 1866, bound through ownership changes, swallowed by Standard Oil in 1879. It found itself free again after Standard Oil breakup in 1911. In 1972, Jersey Standard ditched its multiple names and became Exxon. Fast forward to 1998, facing tough competition and low oil prices, Exxon and Mobil decided to join forces. They merged in 1999, creating the Exxon Mobil we know today. The merger wasn't a simple handshake. Exxon technically bought Mobil, but both names lived on in the new giant. Now I'm gonna introduce you to Darren Woods, the chairman and chief executive officer, who says, "Our consistent strategy and execution, excellence across the business, delivered industry-leading earnings and enables us to return more cash to shareholders than our peers in 2023. Here is the financial summary of Exxon Mobil Q4 in 2023. Delivered industry-leading 2023 earnings of $36 billion, generated $55.4 billion of cash flow from operating activities, and distributed $32.4 billion to shareholders. Increased Guyana and Permian production by 18% versus 2022 and achieved record annual refinery throughput. Strengthened portfolio with $4.1 billion of non-core asset divestments and 2 acquisitions, one that accelerates low-carbon solutions and one that will transform the upstream business. Launched new mobility and lithium business with the potential to supply up to 1 million EVs per year by 2030. Revenue increased by 43.8% from 2022 to 2023, driven by higher oil prices and increased production. Despite the increase in expenses, gross profit margin remained relatively stable at around 27%. Net income after taxes increased by 56.1% to $55.74 billion. Earnings per share increased to $13.26 compared to $5.39 in 2022. Return on equity increased to 32.9%, reflecting strong profitability. And the debt-to-capital ratio is low at 16%, indicating a healthy financial position. Well, let's take a look at the year 2022. Exxon Mobil's current ratio of 1.41 in 2022 indicates that it has enough current assets to cover its current liabilities by 1.4 times. The debt-to-equity ratio of 0.20 in 2022 suggests that Exxon Mobil has a moderate amount of debt relative to its equity. The gross margin of 27.6% in 2022 is relatively high, which suggests that Exxon Mobil is efficient in generating profit from its revenue. The return on equity of 28.4% in 2022 is very high. The asset turnover ratio of 1.12 in 2022 suggests that Exxon Mobil is able to generate a relatively high amount of revenue from its assets. In conclusion, Exxon Mobil Corp is a good investment. Why? Because of its liquidity. A current ratio of 1.41 indicates enough current assets to cover near-term obligations. Its solvency, moderate debt-to-equity ratio of 0.20 reflects low reliance on debt. The high margins, gross margin of 27.6% and net margin, which is 13.5%, suggests efficient profit generation. Its high return on equity of 28.4% indicates good shareholder value creation. The investment in renewables, exploring investments in low-carbon energy sources for future diversification.
If you would like us to research a stock, please tweet at Collective REC or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective Research. Active fundamental research in global capital markets. Make informed decisions.